All right, trade recap today. Losing trade, eval blown. Let's get into it. As you saw from the video, if you watched the video yesterday, I am pretty much trying to pass these evals in 2 days. So risking pretty much the entire account, trying to make 1500 each day to limit the amount of time that I'm spending on evals. The caveat to that is that I got to be taking good trades, and today was not a good trade to be risking that much on. So, and there's a clear difference between the winning trades and the losing trades, and we're going to get into that. And with this identification, it's going to be up to me to implement it and to stay out of chop range days such as this one. So let's get into it. Coming into the day, top-down analysis. We had the huge sell-off yesterday, opened up this 4-hour fair value gap. We came up into it yesterday and started, if we zoom into the 1-hour chart, started to make our way down a little bit. The 1 hour is a little bit unclear. So within this big 4-hour, zooming into the 1 hour to give us our bias for the day, we have this swing high up here that we could potentially target, or this swing low here, and this swing low here, which would be the 4-hour sell side liquidity, and yesterday's previous day low. So I kind of wanted to see what we were going to do off of this 1 hour fair value gap. Are we going to respect this 1 hour and head higher to this internal high within the 4-hour fair value gap, or are we going to blow through this 1 hour fair value gap and attack this sell side liquidity and potentially previous day low down there? So that's a pretty good top-down analysis, you would say. I would say so. And then I check Forex Factory, and we have PPI news. So I'm like, okay, where's the news data candle? News data candle is right here at 8:30. So we have the data wick low right here. And the problem with targeting this on days like today is we are just straight up chopping. We're straight up chopping. Ever since we put in this data low, chop. We come up. It looks like we're going to be bullish, and then we disrespect, start chopping a little bit more. And overall, you can just see this is just pure chop. But I get so fixated on this data low here that once we finally start to potentially break out of this chop, I entered a trade right here. And it's days like today that it's days like today that separates the good traders and the bad traders, right? Can you sit out of chop when the market isn't actually presenting opportunity? And the caveat that I want to get into is the good days happen. The good days happen when we are trending towards an external draw on liquidity. When price is actively trending towards a high time frame draw on liquidity. And we were not actively trending this morning. We opened it up. Literally the first 2 candles, huge, almost 100-point move candle. And then look how from the wick low to the wick high is like 85 points. And then the very next candle eats it all up. This is chop. This is not trending price action towards a high time frame draw on liquidity. And a majority, if looking back in my journal, every single good trade that I take is when we are actively trending towards and displacing and violently going towards a high time frame draw on liquidity. And it's as simple as that. We're not actively trending here. That's the problem with sometimes targeting these data wicks, is you get so fixated on it that you're not even allowing price to, like, there's no room That's what I'm saying. There's no room for price to actively be trending towards this data low. And that's why I take this trade. You know, we close below this swing low here. Okay. There's still, I mean, it's just not trending price action. That's the problem. So I take this off of the 1 minute candle close. We come up to this 1 minute for value gap, get a strong candle close. I entered on the candle close. If you also zoom into the 5-second chart, which is the aligned time frame with the 1 minute, we do have market structure shift, kind of. We do end up closing below, but like, yeah, man, like we got bearish reactions out of the 1 minute, and it's unfortunate that we didn't at least come down and take the internal low. This is one of those situations where I would have wanted to see a quick move past the internal low, go break even. But you're just not gonna get that whenever the price action looks like this sloppy mess. The play here, and this is why I went over the top-down analysis to start the video, is if this isn't a data wick, I'm never targeting this low ever. I'm not. I'm waiting for displacement towards this buy side, or displacement and towards this sell side and this sell side down here. And that avoids, I'm not even on the 1 minute chart in that scenario. I'm waiting for these higher time frames to break out. So that's the difference between the winners and the losers. Is, are we actively displacing? Are we actively going and moving efficiently towards a high time frame draw? If we are, great. That's when you get the pullback. That's when we're displacing. We open up a big fair value gap to execute within. You can either find the internal model or simply wait for displacement back up. Boom, boom. That's the difference, man. That is the difference. It's what do you do when that isn't happening? You have to sit here and just do nothing. You have to sit here and do nothing. I need to sit here and do nothing on a day like today. It's ridiculous. So, man, it's just ridiculous. So that's the trade recap. I'm going to go in my journal and just real quick so I can show y'all what I mean by this. Example of a winning trade. Boom. 5 minute is actively displacing. At this point in time, there's no question that we're going to this sell side liquidity. What do the higher time frames look like? The 15 minute. Look at this 15 minute candle close. There's no doubt in your mind that we're headed towards this sell side. So we get a pullback to a 5 minute. Boom. Winning trade. Losing trade. This is not actively buy side up here. This is from earlier this week. It was literally FOMC when we just chopped around. I don't even know why I was on the charts. Buy side up here. Are we actively trending towards that drawn liquidity? No. I get FOMO when I top blast the hell out of this candle right here because I'm trying to make back the losses on my XFA. Emotional trade. Loss. This is literally from Monday or Tuesday of this week. The 27th, what was that? Tuesday. Are we trending? Are we actively trending towards a higher time frame drawn liquidity? No. I have a draw, and I just enter off of this inverse that we already wicked this internal high here. We come back down, rebalance, and then we take the drawn liquidity. It's just actively trending price action. No, it is not. It is not. Another loss. Buy side up here. We rebalanced to a 15. Is this actively trending price action? No, it is not. What would actively trending price action towards this draw on liquidity be? We displace higher, close above this high, pull back, then you execute here, targeting higher. Do we get that move? No. This is just, we're so far away. So this is my one statistical loss that I was talking about, where I actually took a good loss. We are actively trending towards this high time frame. Liquidity up here, pull back to a 5-minute, displace out of it. I entered, get stopped out to the tick, and then we run to buy side. Is that very unfortunate? Yes, this was last Friday. But it caused me to crash out and take those previously bad trades that I just showed you. Emotions. It's okay to take a loss like this. It's okay. But, oh man. Actively trending price action. Another example. Winning trade down here. This would have been a winning trade, I remember. Because once we take the internal low, we never came up to this entry point, but my fill was really bad and I got break even. Regardless, trending price action. Trending, pullback, fair value gap, execute. This is when I need to be taking trades, okay? Another good example. Market opens here. We immediately displace. Pull back to our fair value gap. Bullish reactions. We go to the buy side up here. This is all built like, oh my gosh, dude. There's a clear difference. The market opens and we move. Today, the market opens and we chop. Coming back to the charts, man, look at this. You would expect at this point in time this leg to deliver to the data low. But on days when we chop, what do? We just fail to take draws on liquidity. So, this one sucks, obviously. It's never fun to post losses. It's never fun to blow accounts. But this happens when this happens when you are trying to pass these evals fast, and this is going to happen when you take terrible trades, because you take a trade and it's blown. So, yep, we'll be on a new eval next week, and the mission is only taking trades when we are actively trending towards a strong high time frame draw on liquidity. I've said that so many times this video, you're probably tired of me saying it, but I need to nail it inside of my brain. So that was the trade from this morning, and yep, I will see y'all next week. Peace.